If that happens, silver has a chance to bottom around 22 an ounce, where it is right now. That's the big support line. And if we just replicate the 200% move for this new bull market, then you're talking about 22 an ounce to 66 an ounce at the top, a new all-time high, new nominal all-time high.
What's up, YouTube? Silver Dragons here, and today I'm joined by Lior Gantz, founder of Wealth Research Group. We're going to talk about what's happening with gold and silver this year. Lior, how you doing?
Doing well. Happy to be here.
Awesome. Hey, I want to first talk about the Fed raising rates. It seems like that's actually what everyone wants to talk about. Can you give us your opinion on what's going on right now?
It's definitely what's moving trillions of dollars right now on Wall Street. And basically the question is, one, are they going to raise 3 or 4 times? Which is, and you can be on the side that says, nah, this is all a big fake out. They're going to raise twice, once, or not even raise. But the Wall Street consensus right now is either 3 or 4. And that's how the markets are behaving, and that's how gold is behaving. So for the purposes of answering your question, I'm going to talk about that in the same kind of way that I would talk about CPI numbers and not real inflation, which people obviously know is much higher than CPI. But CPI is what moves Wall Street. So when I talk about inflation, I talk about CPI. So what happened with rate scale is we saw that interest rates bottomed on August 6th, 2020, the same day that gold and silver peaked. Interest rates bottomed. They then rallied a lot from 0.5%, so 0.5% for the 10-year bond, which was the all-time low in August 2020. It rallied all the way up to 1.75 in February 2021. Coinciding with this, you saw a huge sell-off in gold, which was already pricing in higher rates, tightening, the end of stimulus. Tech stocks continue to go up and up and up and up and up until GameStop. That was like the moment where Wall Street understood the size of the bubble in high-flying tech. And you can look at gold, silver, and high-flying tech and plot the charts and see that, man, in January and February, a year ago, they all peaked. And throughout 2021, gold basically moved sideways and down in order to find the right price for the environment that we're in. And I think right now, where it's priced is very easy to figure out that it's priced just right for 3 rate hikes. And so when you see a day like today where we're recording and it's down a little bit, but the markets are really down, it's because Goldman Sachs just came out with 4 rate hikes as their projection for the year. And this is all on the backs of releasing the minutes from December, where the Fed says it's going to do it sooner, stronger, more aggressive, and it's going to really tighten and taper because we're in a really fast recovery, right? We already have very low unemployment. It's very hard to find workers, very high inflation. I mean, it's a very robust recovery from what we saw. Efficiencies are very high. A lot of corporations have really gotten adjusted to this new normal. And so that's where we are. And that's why I love gold right now, because it's the certainty that the market, that the market has priced gold right. In other words, that it's not overvalued and that it's not severely undervalued, and that it has a lot of upside potential, it is truly quite certain. The Fed has raised rates 6 times between 1971 and today. When I mean 6 times, I mean it has had 6 rate hike eras. 2 in the 70s, another one in the 90s, in the 2000s, twice, and then what we saw in between 2015 and 2019. 6 times. In 100% of the cases, gold has risen since the first rate hike. It's very important. It's a very important statistical fact. And then the average gain has been 30%. And so if we're just 2 months away from the seventh rate hike period, and we're trading around 1,800, 30%, which is the average, is $540. Even if gold languishes for the next month or two, and goes down by, I don't know, 1% or 2 or 3%, you're still talking about a 500% move from about 1,750. That's a new all-time high for gold. And if we're doing 3 or 4 rate hikes this year, it means that there's a good chance that gold is going to an all-time high this year. And by the way, I know it's a very short answer. I can't get into all the data behind it and the charts, etc. If you go to wealthresearchgroup.com/2022 or 2022, you can download the exclusive report that we put out, the full macroeconomic outlook for 2022. So I'm very bullish on gold for this year. And not only that, but the beauty about this is in 2020, gold rallied with everything. It was just gold rallied because the Fed was pumping trillions of dollars into the system. Now it's not. It's rising because of fundamental reasons in 2022, and stocks are really going to suffer this year. So there's another component where it's not just an inflation hedge, but it's a stock market hedge. A lot of corporations, a lot of institutions, and certainly a lot of fund managers are getting calls from clients that are telling them, "Hey, our portfolios are really falling here. How can we hedge?" And the best uncorrelated asset class is gold. So there's a lot of reasons for gold to really flourish in 2021. In 2022, I'm sorry.
No worries. Lior, let me ask you about silver. Now, if we are going to see gold move up 30% this year or over the next couple of years, where do you see silver moving? Is that a 30% jump up as well? Or will we see silver move much higher because, of course, it is more volatile and it can move faster?
Okay, so between 2015 and 2019, gold moved by 100%, right? From December 2015 was 1,053 an ounce at the bottom to 2,067 at the top. So a 98% move, bottom to top. For silver, it bottomed around 11, and then it went up all the way to 30 in January. So a 200% move, which is obviously much bigger. Silver tends to rally towards the end, where the excitement comes in, and a lot of the retail crowd and the speculative money comes into the picture. So keep that in mind. The difference is that in 2015 to 2019, the last rate hike period, the dollar was in a bull market. And that's the big difference, because right now we're in a dollar, we're definitely not in a dollar bull market. We're very close to an official dollar bear market. And I think that if we do enter a dollar bear market, then let me just define a dollar bear market. The DXY needs to go below 88. So look at the DXY index below 88. If that happens, silver has a chance to bottom around 22 an ounce, where it is right now. That's the big support line. And if we just replicate the 200% move for this new bull market, then you're talking about from 22 an ounce to 66 an ounce at the top, a new all-time high, new nominal all-time high. And for me, what I think is the best risk-reward strategy for silver for the next 2-3 years as we see these rate hikes and enter this likely dollar bear market, what I would say is this: gold will move first, so it makes sense to accumulate gold first because we have time with silver. Silver, for me, it needs to go above 25 for me to gain more conviction on it. And then it needs to go to 29, where the big resistance is. If it breaches that resistance at 29.5, you may lose this initial $7 move that we're seeing right now. But that silver dollar move is a speculative move, right? If we're speculating that silver will enter a bull market and will go from 22 to 29. So the risk is huge. Whereas you can take that same $7 margin, which will be from 29 to 36, because the size of the range between 22 and 29 will be the size of the breakout initially, so 29 to 36. But the risk would be much more diminished, so you can actually use leverage. And instead of gaining just $7 an ounce, you can use either a double leverage or triple leverage options, mining stocks, silver mining stocks, and you can gain a lot more with diminished risk. So in my opinion, if you're asking me about silver, watch 25 and then become a little bit more bullish, but watch 29 and the excitement that happens there with all the algorithms trying to sell and buy and sell and buy until it breaches that. Once it breaches that, we are in a bull market. You're not going to see it on CNN and then on CNBC, etc., until it reaches about 35. That's where the media will start picking this up. So we have a lot of time, and there's a lot of upside potential here. The March rate hike is your first signal of what's going on. The level of conviction that I have is so high because I think the Fed was so much behind the curve that the 10-year bond, in my opinion, is close to already peaking. I'll say that again. Even before the Fed has even raised rates and started to tighten, I think Wall Street has already done pretty much 90% of the tightening. So the next time that the Fed does something, they will already start to price in easing. In other words, when the Fed starts tightening, Wall Street will start easing. And that's why gold will start moving up. And that's why it's done that in the last 6 times. The market is always forward looking. So if you tell me, hey, I'm starting to tighten, my mind is, okay, well, if you're starting to tighten, that means I have another year before you're starting to ease. So I can start accumulating gold right now because I know that in a year from now, it's going to be much, much, much higher. And that's what the way markets work. And I think that you need to kind of understand that this is what's going on, because the view of everyone, right? If you ask anybody, they'll tell you, oh man, the Fed is going to tighten this year. The Fed is going to taper. It's going to contract everything. Everything is going down. The markets have already figured this out months ago. That's why you saw tech stocks going down by, and I'm not talking about big tech. I'm talking about the Russell 2000, the NASDAQ 3000. Half of the stocks on the NASDAQ are already at 52-week lows. Half. There's a 3,000 stocks. It means that 1,500 companies already at 52-week lows and have fallen by about 50%. So if you think we're in a bubble, think again. The market has already priced in very aggressive tightening. So if we're not at the bottom for gold and for tech, we're very close. And I think gold will rebound faster than tech. Tech relies on millennials and retail money, which is very scared right now. Whereas gold, it's a pretty simple story. The Fed raises rates, we buy gold. That's the algos. So I think we have a really good chance that gold hits a new all-time high and that silver goes and retests its resistance at 30. And I know I'm bullish, but I am telling you, if you follow our newsletter, I will be reporting this as we go.
So let me ask you this, Lior. Let's say that gold does hit an all-time high this year in 2022. Are we still in a super cycle for precious metals where we could see them continue to go up for the next 5 or 10 years? Should you still be accumulating after that point?
Good question. I think if you look historically, gold bull markets have ended with euphoria. We certainly do not have any euphoria whatsoever in the gold sector, whatsoever. We end gold markets with silver mania, no silver mania at all. Last year, the silver community tried to spark mania on Reddit. It didn't work. Nobody cared. So it literally had a global test to see if people care about silver. They don't. we are nowhere near mania for either gold or silver. I think we had mania in July 2020, where silver had its best month in 40 years. But it was such an unprecedented time that I don't think we can judge everything from that 1 month. It was an unprecedented mania in everything. So I cannot say it was a silver mania, because it wasn't. It was mania in everything. Everything went up. And so in my opinion, no, we're nowhere near that. But why would I make a decision right now? Why would I answer your question right now on what I would do if I don't know the level of euphoria? There's a few indices that check the level of euphoria in the gold sector. There's one that's called the BDGM, which is basically the bullish index. And when it goes to 100, you know we're in euphoria period. We're nowhere near that right now. I think that in general, there's a lot of disappointment that in 2021, when it was inflation was the whole story, gold actually did nothing. So many people are so disappointed because everyone was like, this is so obvious. Why aren't people buying gold? Why aren't people buying gold? And it's because it was so obvious that in 2020, it was already priced in. And if you missed the move from March 2020 to July 2020, you were sitting there and thinking, man, what's going on? Why am I the only one seeing it? Whereas you're not the only one seeing it, but other people saw it before you. Now it's the other way around. Everyone's like, why isn't anybody buying gold? Obviously, if the Fed is going to tighten, it's going to be very, really bad. Whereas the smart money is definitely positioning right now in gold. You can look and see gold is doing very well in the first trading week here of 2022. Sorry, while the Nasdaq is already down 8% in 1 week. It's one of the worst starts to a year in the last 30, 40 years for the Nasdaq. So it's already acting as a very good hedge. So when Q1 ends and funds show their performance, and those that are very tech heavy are underperforming gold, there's going to be a huge rotation, especially with the Fed rate hike. As we're doing this interview, by the way, tomorrow Powell is going to testify in Congress. And if Powell does a decent job of explaining what the Fed is going to do this year, and he explained that they're going to be aggressive, but that they reserve the right not to be as aggressive, that's going to be so good for gold, because the only risk left is that they over-tighten, interest rates go up faster than inflation, which makes the case for gold weakened. But I don't think that's what Powell is going to say. I think he's going to tell the markets that they're overreacting and that they're pricing in too much aggressiveness. So if you're asking me, how will I react when gold is 2,300? I don't know. But just look, if you were around for the 2011 mania, silver was going up daily. Literally, I can tell you how much mania it was. I booked my honeymoon in late 2010, and I was so confident that silver is going to be trading up because it was just, it was gone crazy, that I didn't pay for like the flight and the hotels when silver was 34 an ounce, because I was waiting for it to hit 43. Now, in our minds today, you're probably thinking, man, it's nuts. I wish it would go to those levels. But it was so much momentum for silver back then. So we're nowhere near that. Believe me, you'll feel it here when you see a silver mania. We're not there.
I believe you. A little bit ago, you brought up inflation, and I want to get your take on that. Recently, we've seen it up to 6.8%, and we should have the December numbers out here on the 12th of January. Where do you see it going from here? Is it going to continue to go up, level off, perhaps go back down? What's the story on inflation?
I think it has peaked. The mania regarding inflation has peaked. Now, what I want to say here is not that we're going back to sub 2% on the CPI, not at all. It's probably going to hover around 3.5. for the remainder of 2022. There's still a lot of supply chain problems and other issues. Food prices are going to remain high. Oil, I think, is going to go over $100 a barrel. So we're not in a low inflation environment. This is not the decade we've entered into, not at all. I just think that inflation as a story, as this is the biggest story, it's over because everyone is on it, right? Biden almost fired Powell for inflation. So think about how much is already priced in, how much adjustments have already been made to make this happen. And this is going to be much more of the free market solving this than it's going to be about the tightening. So what I think is we're going to reopen the economy. It's a very transitional year. Inflation is not going to be the big talk. The big talk is going to be the midterms, interest rates, as we're discussing right now, and anything else that develops that we still don't know. All the other developing stories for 2022. In my opinion, the best thing to think in terms of how to look at inflation going forward is this: we're in a decade where millennials are going to become the most important demographic group in America. We have a 2 to 3 million home shortage, and we need to build a lot more homes. And millennials are going to buy these homes. Millennials are now 38% of the workforce. They're going to be 75% of the workforce. So there's a lot of growth, a lot of positive GDP growth that's happening as we're having higher inflation. And that's not a bad thing. This is not like an inflationary crisis. No, this is more of an inflationary boom. And this is really good. At the same time, we have a dollar bear market. So a lot of the hedging is going to be done with gold and silver. That's why I think gold and silver have a really good stretch in front of them here. And I like what I'm seeing. I like the United States way more than I like Europe or Japan or China. So within the opportunities that I see around the world, the United States looks amazing, even with all the problems that it's having.
Right on. Well, hey, Lior, we really appreciate your time. If people want more information on you and what you're doing, where can they find that?
Wealthresearchgroup.com is the website. You can sign up for the free newsletter. That's one thing. I also want to tell you that if you go to wealthresearchgroup.com/portfolio, you can access my portfolio 24/7. So that's a great kind of way to introduce yourself to my world.
Perfect. Well, thanks again, Lior, and we will see you next time.
Thank you.